Welcome to the Deep Dive. Today, we're cracking open the sources you sent us, taking a close look at two companies in the rubber business, NER and STA.
That's right.
You wanted to understand the difference in their approaches and, specifically, why STA's recent performance seems, well, maybe a bit more volatile compared to NER.
Yep.
So we're going to dive into the latest numbers, the insights from your material, and try to get to the heart of that.
Think of this as your quick briefing on what's driving these companies right now, all pulled directly from the info you shared. It's actually a great way to see how different strategies can play out, even in the same sector.
Okay, let's get into it then. We'll start with NER. Your source kicks off by highlighting what it calls head go, which translates roughly to very impressive performance, right?
Yeah.
For Q1 2025.
Yeah, very impressive. Seems about right, looking at the numbers. The report says NER's net profit saw a pretty significant jump, 34.22%.
Okay.
Climbed to 608.84 million baht for the quarter.
And their total sales revenue, that was up too.
Also strong growth, up 32.96%, hitting 8,698.02 million baht. So yeah, solid top and bottom line growth there.
Right.
But what's really key here, based on your source, is why. It wasn't just one thing.
Okay.
The source breaks it down. It was fueled by, well, two main factors. First, a higher average rubber price. That was up almost 20% compared to the previous period. And that alone added something like 1,443 million baht to their revenue difference.
Wow. Okay, so benefiting from market prices. What was the other driver?
Increased sales volume. They actually sold more rubber, up about 10.88% in volume terms. And that contributed another, say, 711 million baht difference in revenue.
That's a pretty clear picture for NER in Q1 then.
Yeah.
Sell more rubber, get higher prices for it.
That's the story from the source. Yeah, pretty straightforward. Sell more, sell higher.
Interesting. Was there anything sort of putting pressure on the results, even with that strong growth? And any headwinds?
Yeah, good question. The report does mention a slight dip in their gross profit margin. It moved from 11.64% down to 10.61%.
Okay. Why was that?
It indicates the cost of sales, what it cost them to produce the rubber they sold, increased a bit faster relative to the revenue. It reached almost 90% of sales, 89.39%.
Gotcha. So costs rose faster than prices, squeezed the margin a little bit, but the overall volume and price increases more than made up for it in terms of the final profit number.
Exactly. That's a good way to put it. Finance costs also ticked up slightly.
Okay.
The source links that to interest on some additional debentures, basically long-term IOUs the company issued.
Right.
But on the plus side, their corporate income tax actually decreased.
Oh. Right.
The source attributes that to benefits from investment promotion incentives, government schemes to encourage investment.
Makes sense.
And the source also gives a nod to NER's focus on ESG projects, environmental, social governance stuff, and receiving a 3-star CAC certification, which points to efforts in, like, transparency and anti-corruption.
Okay, so that gives us a really solid picture for NER's Q1. Strong growth, a bit of margin pressure, but overall very positive, with some ESG focus noted.
Exactly.
Now, let's shift gears to STA, because your sources on STA tell a slightly different and maybe even more dramatic story for Q1.
They certainly do. Yeah, dramatic is a good word. Several sources highlight just a massive surge in STA's Q1 profit.
How massive?
The numbers show profit leaping by an incredible 466.2%.
Whoa, 466%?
Yeah, to 689 million baht. Some reports even use this phrase, "돈칸가르," which basically means they've swung back to profit.
Right, implying they might have been loss-making or had very low profits before this quarter.
Exactly, a real turnaround.
Okay, so what was the fuel for that kind of jump for STA? Was it the same dynamics as NER, just amplified?
Similar themes, yes, price and volume were key, but there's definitely more complexity here with STA, according to your sources.
How so?
Okay, first, prices. They benefited from higher prices, sure, but critically, it wasn't just for natural rubber. The sources specify higher prices for both natural rubber and their rubber gloves business.
Okay, so two product lines benefiting from price lifts.
Right. For natural rubber, the price for TSR20, that's a common grade, used a lot in tires on the SICOM market, which is a big commodities exchange. It averaged 197 cents per kilogram in Q1, and that's up 13% just from the average price across all of 2024.
So that general rubber price trend helped both companies, but STA had this extra boost from gloves. What about volume? Was that strong for STA too?
Volume was the second major driver, yeah. specifically for their natural rubber business. And this is something the sources really highlight as notable.
What's that?
STA's natural rubber sales volume actually increased for the sixth consecutive quarter.
Sixth. Wow.
Yeah, 6 quarters in a row of volume growth. They hit nearly 397,000 tons in Q1 '68. That's up almost 25% compared to the same quarter last year.
That kind of sustained volume growth that suggests something pretty fundamental is working well in their natural rubber operations, doesn't it?
It certainly points to consistent market traction on the rubber side, yeah. Now, here's where STA's story really diverges from NER's in Q1, and it's pretty interesting.
Okay.
Remember how NER's gross margin dipped slightly?
Yeah, costs rising faster than revenue.
Right. Well, STA's gross profit margin increased.
And
Significantly.
increased, even with rising costs likely affecting everyone.
Apparently so. It reached 9.1% in Q1. That's up from 7.9% a year earlier, and also up from 7.5% just the previous quarter.
Okay, hold on. So they didn't just make more profit overall, they actually improved their profitability per sale. How did they manage that? What do the sources say?
Your sources directly link this margin improvement, at least partly, to selling more of their EUDR-compliant rubber.
EUDR, that's the European Union Deforestation Regulation, right?
Exactly. Basically, rubber that's verified as not coming from deforested land, meeting these new, stricter EU rules.
And that commands a higher price or margin.
That's what your sources suggest, yes. That meeting these specific requirements allows STA to get a higher gross margin on that particular volume, and it wasn't insignificant. About 43,000 tons of their Q1 sales were this EUDR rubber.
Ah, okay. So strategic compliance isn't just about ticking boxes for market access. It's actually hitting their bottom line positively through better margins. That's a really key insight from these sources.
It seems to be a significant factor, yeah, at least in their margin story for this quarter, based on these reports.
Okay, so let's sum up Q1 for both then. Both benefited from higher rubber prices. Both sold more natural rubber. NER saw solid growth, decent profit jump, but a little margin squeeze.
Right.
STA, meanwhile, saw this massive percentage leap in profit, driven by both rubber and gloves, strong volume growth in rubber, and a significant margin increase, which seems partly linked to these strategic EUDR sales.
It captures it pretty well based on the sources, yeah. Different dynamics playing out.
And this brings us right back to the core question you wanted us to look into. Given they're both in rubber, why does STA's performance seem, more volatile over time compared to NER? Yeah. More peaks and valleys.
Right. And looking at the totality of your sources, which cover not just this recent quarter, but give some historical context for STA too, the most prominent difference that keeps coming up is STA's significant involvement in both natural rubber and rubber gloves.
All right.
While the NER source we looked at was laser-focused on rubber price and volume, STA's financial story across your different sources is consistently tied to how both of those businesses are doing, the natural rubber side and the glove side.
So the suggestion is that the glove business is the main source, or at least a major source, of that extra volatility.
Precisely. That's what the information points towards. Your sources clearly show that STA's results have swung, well, quite dramatically in the past. Well, you see reports talking about periods of extremely high profits, driven by that huge surge in demand and prices for rubber gloves, especially, back in 2020, 2021, during the peak of the pandemic.
Yeah, I remember that. Glove demand went through the roof. Prices, too.
Exactly. Huge profits then. But the sources also detail the other side of that coin. Periods where STA's profit dropped sharply, or they even reported losses.
Okay.
Specific quarters are mentioned, like Q1 65, Q3 65, Q1 66, Q2 66, and they even reported a profit loss for the full year 2023.
And the sources link those downturns directly to gloves.
Explicitly, yes. Linked to the significant decrease in rubber glove prices and demand as the pandemic effects faded and the market sort of normalized or even overcorrected.
So it really looks like STA's heavy involvement in the glove market, and your sources mentioned this includes their majority stake in their glove subsidiary, STGT,
right?
That this has been the primary engine driving those big historical swings, delivering, explosive growth sometimes, but also contributing to sharp falls at other times.
That's certainly the clear pattern that emerges when you look at the historical context provided in your sources. The glove cycle seems much more pronounced, more boom and bust than maybe the underlying natural rubber cycle alone.
Are there other factors mentioned for STA's performance? besides just market prices?
Yes, the sources touch on a few other things that add layers to STA's story, potentially adding complexity or, volatility. Things like their plans for pretty aggressive production capacity expansion are mentioned.
Expanding capacity.
Yeah, reports mention targets like aiming for over 3.9 million tons annual capacity by the end of 2023, adding capacity over various years, though, translating capacity targets directly to sales volume isn't always straightforward.
Sure.
Their focus on EUDR compliance, which we discussed, is a strategic positive in terms of margin and market access, but it also involves investment, operational changes, costs.
Yeah.
Debt levels are sometimes mentioned, and even broader things like potential U.S. tariffs impacting the global glove trade or just general political uncertainty are cited in some reports as factors analysts watch when evaluating STA.
Okay, so piecing it together, while the sources don't give us like a precise volatility score comparing the two side by side over history,
No, nothing that quantitative.
the narrative presented for STA is just fundamentally shaped by the ups and downs of this separate, seemingly more volatile rubber glove market that's layered on top of the natural rubber market dynamics, whereas the NER report we saw was purely focused on the rubber side.
That seems to be the key takeaway regarding your specific question about the perceived difference in volatility, drawing directly from the information you provided. The business mix is the core differentiator highlighted.
Okay, so pulling this all together then.
Yeah.
What does this tell us about these companies and their strategies based on what we've seen in your sources?
Well, it suggests that STA's model being more diversified, including gloves, and actively making strategic bets like leaning into EUDR compliance, it just creates a fundamentally different financial profile compared to a company like NER, which, based on its source here, seems more tightly focused on the core natural rubber business itself.
And the potential upside, the advantage maybe of STA's approach, what do the sources suggest there?
Well, look at their Q1 results, right? And those past peaks during the glove boom. The sources indicate the potential for really exceptionally strong growth and also significant margin expansion when conditions turn favorable in either the rubber market or the glove market, or ideally both.
Right.
Especially if they successfully combine that with strategic moves like capturing that premium on EUDR rubber we talked about.
But as you said, that potential for higher highs seems to come packaged with a higher risk of volatility, of lower lows.
Exactly. The sharp downturns linked directly to the glove market cooling off illustrate that risk clearly. And you can see this reflected in how analysts view STA, according to your sources.
How so?
Well, the reports mention analysts sometimes cutting their targets or ratings on STA, citing, volatility concerns or cost pressures, often related to the glove segment. But then at other times, you see buy recommendations.
Based on what?
Based on factors like the potential benefits from EUDR, maybe positive impacts from trade tensions diverting demand their way, the underlying natural rubber volume growth we saw, or even things like dividend yield.
So it's a more complex picture for analysts to assess.
It seems so. The sources don't really tell us which model investors prefer, of course, but they definitely show the wider range of factors, both positive and negative, that swirl around STA's more complex business model.
Okay, so it looks like STA is playing across more of the rubber value chain, natural rubber and gloves, and actively trying to adapt to things like international regulations, EUDR. While NER's recent success story, at least from this source, is presented much more through the lens of just navigating the core natural rubber market conditions well.
That differentiation in business structure, strategic focus, and therefore exposure to different market cycles seems to be the core story coming through your sources.
Right. So wrapping up, it's clear that while NER and STA both operate in the rubber world, and both can benefit from favorable market conditions like higher prices, their different business mixes really do seem to create distinct financial characters, different potentials for growth, but also different potentials for volatility.
Yeah, and STA's significant rubber glove business, plus its strategic focus on areas like EUDR compliance, those appear to be the major factors driving its recent performance jump, but also contributing to those bigger historical swings compared to a company perhaps more purely focused on natural rubber.
Which really raises a fascinating question for you to think about as you continue looking into this sector. As these global markets for natural rubber itself, for rubber gloves, and for related things like compliance rules, EUDR, as they all continue to shift and evolve, how will these different strategies, the more focused one versus the more diversified one, how will they actually play out over the longer term? What might that mean for their future growth, their stability, their volatility? Something to definitely chew on as you continue your own deep dive into the industry.